Hello again, everyone. This is Joe Hinches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Thursday, March 26th, and we're going to take a look at the markets the way we usually do, and we're going to look at several of the four international indices I haven't looked at in a couple of weeks. Germany, Russia, India, and China. And then we're going to look at Best Buy, Caterpillar, Chicago Bridge and Iron, Celgene, and YY. Okay, but first, like I mentioned in the last video, special announcement. If you haven't looked at checked out the training page on my website for the special training video I've got, please do that. Head on over there and check it out. It does get you on a list of, if you're not on the list, you won't get some of the emails I've got coming out over the next few weeks of some additional material. And getting you on the list. And then we've got a special video series, training video series that'll be out in a few weeks. So anyway, all of that just to get yourself on the list. So I wanted to pass that on to you. Okay, let's get into the markets here. The Dow is down 40 points today. So it's broken. It looks like it is breaking down out of this wedge yesterday and today. Okay. And, and I've got this wedge, and I talked about it in my last post. Titled the post was Wedge or Something Else. So right now, it looks like a wedge. Now, it could morph into something else, as these patterns have a tendency to do. But this is the best, picture of this mess that I can figure out. And it kind of makes sense to me. It's acting like it makes sense now. That, notice how the Dow broke below this low here. This March 12th low, March 12th or 11th, right, that pivot point. Let's take a look at the S&P 500. The SPX did not quite get there, but again, it is breaking down out of what looks like a channel. Now, this could, again, morph into something else, but right now, that's the way it looks, and it sure is acting that way. And, I wanted to pass on, I'll probably write this in the post, and but, I came across yesterday a really interesting article in Bloomberg. It was talking about U.S. stocks can't get a rally going, longest drought since 1994. So what they were talking about is that on the S&P 500, it is not put together back-to-back up days, since it looks like right here, in 24 sessions. And that apparently is the longest streak since 1994. Last year, the longest streak was 11 days. So if this was 2068, this is 2068.59, 2068.53. So this wasn't even an up day. So I don't know where it would have to be. Maybe it's all the way back here to January 22nd. Now, right in here happened. So anyway, I'm taking their article at face value. If this was the last time back to back, was this up 2109.66, 2110? Now that was a down day. So again, some of this is really fractionally lower, but the point of it is we've had a lot of chop. Okay, so the point of what's going on is we've had a lot of chop, and we've had more chop than usual, I think. So that is making things a little more difficult. Now, let's take a look at the NASDAQ here. Remember how I talked about I thought this might be an exhaustion gap because it got filled so quickly, and then boom, look what happened. Now, did I expect to have this huge down day yesterday? No, but that's what happened when this gap got filled like this. It's the end of the move. It almost looks like a little bit of a five-wave sequence, and now it comes crashing on down, and it takes out this low point. It comes right down to the 55. So we may get some support in here. We'll just have to see. I mean, sometimes it does that, and sometimes it doesn't. So that's why you got to watch. So let's see. The next one is the New York Composite, and let's blow this up a little bit. And again, a similar type thing with, we've now been down. Well, this is 3 days in a row. I think this was an up day. Yeah, it was an up day because it's the dark blue. So we've had 3 down days here, but we have not taken out this low. So this did not get as negative. So it never got quite as bullish, and it didn't get quite as negative as the other indices. And the last one is Russell 2000, which got extremely bullish here on this move, and it's pulled back, but isn't even close to taking out this recent low. So right now, when you look at the S&P 500, you know, this didn't go to a new high, and it hasn't taken out the new low yet. So, you know, if you look at and you think about the fact that uptrends, higher highs, higher lows, and downtrends, lower highs and lower lows, we're kind of watching to see what develops in here. And what in the Dow's kind of telling us that, well, maybe it's starting to do lower lows. Maybe this is starting to roll over. All right, let's take a look at our indicators real quick. Well, I had it right there, didn't I? Short-term trading index, it's not giving us a whole lot to go on. I mean, it's right there in the middle. It just keeps stalling out on the 10-day. The VIX is interesting. Now, okay, so yesterday I saw this, and this close pops up, and it closed above the last 4 days trading range, okay? Now, that happened back over here, and I remember thinking to myself, what are we going to get? Are we going to get some continuation? You know, this closed actually right above this, the high 1417, and it closed 14.21. And then we got this kind of a pop, and then look at the kind of pop we got in here today. Now, what's interesting to me is, let me see if I can pull this little marker over, and I can use that. What I find interesting here is that we got this kind of a, you know, messy little V-shaped bottom, and then we're coming off, and we're coming off. Now, we'll see, do we get to follow through in here or not? But I'm looking at the similarities. I look at the similarities that, you know, out of a previous pivot is a part of this downtrend. You get this pivot. You had a previous pivot in a downtrend here, and it's broken that trend line just like it broke the trend line here. Now, granted, this move got higher than here, and this move has barely budged above that. Let me get rid of this marker. This barely got above. And the other point I just want to know is, yeah, it's almost right at it. What is the high? 17.19, 17.19. So it's exactly right to it. So it didn't surpass it. So, you know, it's not an identical, but, you know, there's a lot of similarities to this little bottom over here. And I'm seeing a lot of similarities. So I'm kind of wondering, are we going to get some follow through just like we got? These were pretty big moves. Remember, where is this? This is December 9th. And notice how we had divergence. The divergence in here is pretty slight because, yes, this went to a lower low than here, but by like 0.2 or something, very, very minor. But it was a slight divergence. So if we're looking at this, when was this? December 9th. So if we go back, let's take a look at the S&P 500 and December 9th. December 9th was right here. So this was where we are on the VIX. You know, the VIX today is where the VIX was acting here on December 9th, and then this is the kind of continued sell-off that we got. So that will be interesting to see whether or not we get continuation and a breakdown and further and come all the way down here, say to the 233-day moving average. Let's take a look at the high-low. The high-lows drop back down. We're right almost to the neutral line. So pretty big collapse coming off of this. One more new high than new low today after this got up into this resistance area, or where previous, call it where previous turning points occurred. Okay, McClellan Oscillator, so that means I got to go back to the New York Composite because that's where I've got it, and it is pulled down below the zero line. So again, we're down in negative on McClellan Oscillator. Let me refresh it, make sure it hasn't changed. No, it's still the same. So again, selling off, and again, as we get down below 150, minus 150, we're getting into oversold territory. We are not there yet. But we never got to overbought either before it turned down. So you just, you know, it's, you know, all you can do is monitor and say, you know, where are we, and see what happens. Okay, let's take a look at the German DAX. Now, the interesting thing, I'll come back to the indicators in a minute. So this has had quite a push. And you can almost make the case that I mean, there may have been 5 here, pullback, 1, 2, 3, 4, kind of a consolidation here, and then a final 5th wave push. We're getting some kind of pullback in here, retracement. It may be minor. Let's see what this one did. Let's see, this one pulled back 50%, okay? So if that one pulled back 50%, and then let's see, if we take it from here and we go to the top here, then I would be expecting a pullback, at least if this is, you know, 1, 2, 3, and this is a 4th wave. And again, I haven't looked at it. Let me glance back. That could be what it is. I mean, it could be a 4th wave. You know, it could pull back down to 23.6 or down to 38. A lot of times it gets into that kind of a zone. So, you know, more to come. The other interesting thing about this, and that's not, let me look at the indicators for a minute, especially the DI plus and DI minus. And that's a little too much. Sometimes it's easier to see it when there's not quite as much. Okay, so the interesting thing about this is that I've noticed that when either the DI plus or DI minus crosses the ADX, the average directional, which is this thin black line, a lot of times that means, you know, that the move to the high side, if it's the blue line, is over. And if it's the red line, it means the selling is pretty much over. And now it's got to be distinct. It's got to be that it's high enough, you know, up around in the 40s or so. Now notice how it did happen the last couple times, like on the selling. You know, the selling had ended, you know, when the cross occurred, and the selling had ended when the cross occurred here. And actually, if you go back, another really clear one, where was it? It was here on the blue, that the buying pressure had pretty much ended and it rolled over and corrected. Now, again, there's a lot of times where you get things that are muddled down here. I'm talking about really clear, somewhat high moves that have occurred. So right now, my expectation is that the buying pressure has pretty much petered out, and that this is going to roll over and correct, and we'll have to watch and see if that's what's going on. And, you know, given what's going on with our market, that would make sense that it's kind of in sync with that happening. All right, take a look at Russia. What's Russia doing? Russia's a little bit of a reversal day to day, kind of bouncing sideways down, up. A little bit of a rally over the last couple of weeks, probably since the last time that we looked at it. And then India, Nifty 50. This is kind of surprising to me. This is more of a pullback than I thought. I don't see 5 waves here, so this looks like some kind of 3 wave, you know, still corrective action. So this is, and again here too, like this looks like some kind of 1, 2, 3. So I'm not quite sure what is happening, what I'm seeing in here. Now, this hasn't overlapped with what I've got as marked as 1. If you're looking at closing price, now closing price here on the white bar, this has not overlapped from a closing perspective. So there's always still that possibility that this is pulled back and then it rallies from here. But it's looking like it's getting a little, you know, convoluted, and we'll have to look and see what, you know, I don't have any better interpretation of what's going on right now with this, is what I am trying to say. And the last one we're going to take a look at is the Shanghai Composite. You know, I am sticking, I decided, I went back, I was going to reevaluate the wave count. I'm sticking with this wave count. I think we just got a really super strong wave 1 that came out of this, the corrective action that we had down here, this kind of an ending Y move from a major correction that happened with the Shanghai Composite from 2007 down. And what's interesting is where it's at now. So it's gone through this little bit of a flat correction too, so somewhat shallow. So I think we're into a 3rd wave, which could continue to get stronger here. Right now, the Shanghai Composite's up here where it was in early 2008. So it is making a pretty good comeback, which I don't quite understand with the move in the Shanghai Composite, why some of the Chinese ADRs are not performing quite as well as the stock market is doing for the Shanghai. But anyway, let's see. Oh, I did want to take a look at a couple of these ETFs real quick. And I'm kind of getting a little long here. So where is the, well, let's start off with the home builders. The home builders really hasn't pulled back much. It hasn't taken this out. It's kind of like a little bit of a sideways move in here. And maybe it's because the long-term interest rates seem to be holding somewhat. The other one, semiconductor. Here we go. Boy, did this get killed. Yesterday and today, I mean, look at this. They just smashed this. And of course, some of the semiconductor stocks, SanDisk today, oh my gosh. I mean, that one is killing me because I had a trade idea to get into it on puts on Tuesday, and it didn't materialize for the trade for the day, and therefore I canceled the trade. And I really need to take a real hard look at that trade setup because I think it'll work for a day too, and it would have worked beautifully because they smashed it today. And this, I mean, an MU and a whole bunch of, all the semiconductor stocks are just getting slammed. And so now it'll be interesting. They've come down to the point where it got support came in before. So we'll see whether, we consolidate and come back up, or whether we consolidate and then continue to move to the downside. You could almost make the case that there were 5 waves up here. And again, I haven't analyzed the semiconductors to know if this is like a final 5 waves, or is this 5 and then we got an A, B, C, 2. So like a 1, 2, and I'll have to take a look at that, but I don't have a count on it right now. And the financial ETF, XLF, again, this broke the trend line in here, just like the Dow has and the SPX has. So it's acting negatively. It rolled over pretty quickly in here. All right, now let's jump into our stocks, and we're going to take a look at Best Buy. Okay, so Best Buy did not get the support that I would have expected it to get in here, and therefore it is breaking down. You could draw a trend line in here that it is broken. So this short-term uptrend has broken. And now we'll have to just see, where does it consolidate? I mean, it could get support here at the 55-day moving average near this low, but I don't have any better reading on it. This stock has continued to push to the high side when I've always been skeptical on the move the entire time, and every time it just keeps pushing. So let's see. The next one is Caterpillar. Where are you? There we go. And Cat has been, looks like it's trying to make a bottom in here. Again, I drew these parallel lines because I made this initial point, bounced up here. Looks like support came back in near the previous low. And now it's kind of chopping. I mean, it may be rolling over again. You've got to again say that all the moving averages are aligned to the downside. Short-term, intermediate, long-term. But you do have a pretty big distance between here and the 233-day moving average. That's a lot of air, okay? And a lot of times stocks don't stay in that kind of a position very long. They don't stay with that kind of air very long, but it's really hard to tell, when they're going to come back and how quickly. I mean, because you could look how much air it was above the 233. Well, it just kind of kept riding for a while until it started to pull back. And then it still didn't come all the way to the 233 until like a 2-legged move kind of did that. So we'll just have to watch to see what kind of consolidation it pulls off in here, and does it do some kind of a turn. But right now I'm not seeing the turn materialize. And Chicago Bridge and Iron. Now this is nice. We got in a trade idea here on the 23rd, and it kind of went sideways a little bit on us for a couple of days, but given what the market was doing, pretty nice, held up very nicely, and then today it popped. And so now I'm expecting this to run a little bit, kind of looking for, at a minimum, maybe to come up here and fill this gap, this little gap in here, and it's going to get some more overhead resistance as it gets up into this range. So that's kind of what I'm looking for. And we'll see how it continues to run. Next one is Celgene, And Celgene collapsed with the whole, biotechnology sector collapsing. This, I almost mentioned this when I saw this. This looked like a hanging man to me. It wasn't perfect because the close was not at the high of the day. But when I saw this, I was like, this looks like a hanging man candlestick, which is negative, especially when you get the confirming bearish bar following it. And that's exactly what we got in here. And then we got the continuation more to the downside. So again, you got a little bit of a reversal bar in here and coming in where it got some support before, right down around the 114, 115 point range. So the real test is going to be, can he continue to hold that and come back up and rally again? The moving averages are all aligned to the upside still. So we'll see whether or not it resumes to the high side. And the last one we're going to take a look at tonight is YY. And where are you, YY? Here we are. Now, this is one where, I've been looking at this thinking, okay, is YY big major correction going on for a wave 2, primary wave 2. And I last talked to you about YY back over here. It was right here on the 5th. And I thought, okay, well, we're coming off this parallel channel to the downside. This looks like a perfect time for this to end, and that it was going to take off, and then it came right back down. It went slightly lower again, but it was trying to get some action. So I moved the C and the 2 over to here now, because that's exactly what this looks like it's doing. And especially when you look at this, we now see, which we didn't see before, you can see how this move, you kind of had this 1, 2, and then really sharp 3, but you didn't get anything else, and it just sold off and collapsed. Now we look like we got 1, 2, 3, maybe a sideways, little bit of consolidation, 4, 5. It's kind of hard to make out, probably be a lot clearer if we looked at it on a 60-minute chart, but we now have a moving average cross, okay? And so this is going to be interesting in here, that YY, I would think that this is going to start to get its legs underneath and break this trend line and go. That's what I would be watching for. It looks like it wants to do it. And so right now, I would say I'm kind of turning a little bullish on YY. Now, I don't have a specific trade idea, but it sure acts like it's wanting to turn. Okay, that's it for tonight. Longer than I really intended to go. But anyway, let's see. Thursday night, I'll be back on Saturday with the weekend update. Everyone have a great Friday, and we will talk to you then.